Since the markets are flat, we're going to talk about a lot of earnings now. Kalpataru Power posted a good set of numbers. In fact, the income has grown almost 30%. The core EBITDA is up more than 30%. And the profits are up almost 60%. The management is confident of a 15 to 20% growth over the next 2 years as well. Manish Mohnot, the MD of the company, joins in now to talk about that. Manish, hi, good morning and thanks for joining us. Congratulations on a good set of numbers. But just take us through, what the way forward could be. The order inflows in this quarter was quite muted compared to what you've seen in the past. What can we expect for the next few quarters?
Good morning. Yes, the order book for Q3 was not as good as we had expected, but post-December we have declared orders of around 1,600 crores. Our current order book visibility is around 10,000 crores. And with that, we're confident that we will achieve our 15 to 20% targeted growth for the current year and also for the next year.
Okay, so therefore, what will you guide for in terms of revenues for the next year for FY18?
So we will be guiding for at least 15-20% growth and keeping our operating margins in the range of 10.5 to 11%. And also focus on maintaining our interest cost, at levels of 2% of our revenue, which is a targeted, plans for the next year.
Mm-hmm. Interest costs compared to what this year? I mean, I would assume interest costs would have fallen.
Yes, compared to previous year, this year interest costs are already down by 25%, and we expect that this should further come down getting into next year because our debt levels are at very low levels as compared to our targeted numbers, and that's what our focus is going to be into the next year also.
Where do the orders come from?
So significant chunk of the orders have come from the international market in the current year, primarily the African market. So today our order book is 55% international and 45% domestic. Also, we have seen some good traction coming into the railway orders and some into the oil and gas pipelines.
So what kind of margins do you think you can deliver, considering that some of the international markets are picking up? Should we expect to see better margin performance as we go along?
See, our targeted margin for next year is 10.5 to 11%. Given that also that commodity prices have gone up, I think we will still be able to be in the range of 10.5 to 11% on an annualized basis.
Okay, there was no demonetization impact?
Not significant. There was on one of our subsidiaries, Shubham Logistics, but not at a Kalpataru level.
Okay, in fact, I wanted to ask you about Shubham Logistics because we've seen for the last many quarters that the revenues there have been on a declining trend. The utilization levels have been falling. What was it like this quarter and what's the expectation?
Our utilization is as low as 50% at Shubham Logistics. This has been the lowest level we have seen for the last 4-5 years. It was also driven by impact of demonetization and some other economic factors. I do not see it improving in Q4, but getting into next year, we are definitely targeting 65-70% utilization levels.
Your guidance that you had given, the order inflow guidance of 7,500 to 8,000 crores for the full year, because of the delay in execution of a few projects, it seems like you might not be able to meet that guidance. Is that a fair estimate?
No, I think as of today, we will be able to meet this guidance because we have L1 order book of around 3,000 and we have declared 1,600 crores in January. So while we speak today, we are already at 6,600 crores of orders declared from the beginning of the year till now. And with 2 months, I think we should easily reach the 8,000 plus guidance on order inflow in the current year.
And okay, will you raise any capital?
No, I don't think so. We need to raise any capital for good.
Okay. What about the orders from Power Grid? What's the status check as far as that is concerned? Has there been any improvement there?
So we have not seen many orders coming for Power Grid in the last 4 to 5 months. I think there have been delays in some tenders, but in the next few months, we have used tenders to bid at Power Grid. So we're very confident that getting into the new year, we should get a lot of orders coming in from PGCIL.
Any kind of quantum?
So we have orders tenders closer to 5,000 crores, which we are bidding between now and June as far as Power Grid is concerned. So we should easily be aiming for 1,000 crore plus orders coming from there in the next 3 to 5 months.
Are the railway orders remunerative in terms of margins?
So as compared to the past, they are much better. Right? Historically, we have not made much margin on railway orders, but now they are much better. They are not as attractive as transmission, but still reaching that 8 to 9% margin levels. Transmission continues to be at 10, 11, 12, but railways and oil and gas pipelines still at 8 to 9%.
All right, we'll leave it at that. Thank you very much, Manish Mohnot, for joining us.